Hello and welcome to Pro Trader Strategies Market Commentary for Monday, December the 9th. I'm Eric Wilkinson, and you very well may recognize me as the Wolfman from mainstream media, where I've talked about economic, geopolitical, and market analysis. I'm also here in these daily market commentaries to talk about those same such things. But without further ado, please remember past performance of any trading system or methodology is not necessarily indicative of future results. All right, like I said, let's talk about the economic data, how that's going to impact the overall markets. And today is a Monday. We don't usually get a whole lot of good economic data, and today is one of those days. Really nothing to see here. The only thing to really keep an eye on is how the markets are reacting to Friday's jobs numbers. We are seeing a lot of this possibility of a Fed rate cut pulling out of even 2020. Most analysts are saying that we don't expect to see any type of slowdown in 2020, let alone obviously 2019, but it passed to 2020, and the likelihood of a slowdown even all the way into 2021 is very low. So that means it looks like the Fed is on hold to either raise rates or even lower them. It doesn't look like the economy is really going to be going gangbusters, because I believe that the global aspect of the economies isn't doing as well as here in the United States. I just saw something that Europe has some of the lowest wage growth around, other than Greece. Greece is probably one of the draggers there, but just not a whole lot of consumer demand going to be happening. I think it's going to be relatively steady. All right. I've been talking about this for a little while yet, that I see good or decent strength. I see the economy still on a nice trajectory. We aren't seeing those booms and busts that we are normally used to. So that is a good thing for a stable economy. And I think that that's what we're going to see throughout 2020. I think that's going to be the theme we see there. But that being said, I think that equities do have upside room then in that kind of regard. I don't think that we can see a parabolic move necessarily, but I do think that that gives equities room to move. E-mini S&Ps, my next target now is looking at basically 3,086, and we'll see that on the charts when we start pulling those up on the E-mini S&Ps. But right now, excuse me, we're seeing a decent economy, really quiet volumes. It seems like we're hitting those holiday markets rather soon. Today, it just feels very slow, not a whole lot of volume or follow through going on in either direction. Let's take a look at crude oil here. We've got crude oil above that $59 a barrel. Now, we've talked about that was going to act as resistance on the way up there. Well, Friday, we settled above that $59 a barrel. 60 is another resistance area that we can talk about as well. We tested that on Friday. We saw that getting rejected. The market did come back off, but settled above $59 a barrel. So the bulls are very happy about that. This is where we tested that $60 a barrel today, Friday. Rejected. That also lines up with the value area high. The value area high is going to start slowing momentum as the market trades up and above that. It will see less volume and acceptance at those price levels, right? So because 70% of the volume is spent within these value area high and the value area low, we've got the point of control just slightly below that. But know that the $59 a barrel, which we are just trading above right now, is going to act as support, and the bulls are in control of this market at this point. Without further weakness in crude oil, I think that it might stay. I was expecting us to kind of trickle back down into those mid to lower 50s, but with that Friday unemployment number, the way that the economic picture is starting to look like here in the United States, we could start seeing $60 a barrel being tested more often than we were expecting in the past. So keep that in mind as well if you are short crude oil. I don't have any crude oil in my portfolio at this point. Gold futures are moving a little bit higher today. We're seeing a little bit of weakness. Actually, it's kind of a mixed bag at any given snapshot in the equities. But we're seeing a little bit of a boost here in gold futures. It's only up 70 cents. We could almost say that that's unchanged as well. I don't know that we're going to really see that 1500 mark in this upcoming week or even this month or even this year at that point because of the strength in the U.S. economy right now and the dollar being pretty much sideways. Bonds are moving higher a little bit today. You know, that's after 3 days of sell-offs. The sweet spot for the bonds is right around that 160 handle that I've talked about. We are pretty well below that, but we have found the 78 Fibonacci that will act as support here, and that lines up with the 157 handle right here. And we are about a point above that right now. It was tested on Friday, getting a bit of a rebound today, but here is that 160 handle that I think is where the market is going to want to migrate to and build out more of a volume node around this 160 handle, as I don't think the Fed is going to raise rates or lower rates. So that's kind of going to be where the market wants to migrate to. All right, now this is a bit odd. We're seeing some spikes in the VIX here today, up almost a point right now, trying to test that 15 handle. We are on the highs of the day in the VIX. We are seeing a little bit of weakness going on in the Dow Jones Industrial Average here, down 55 points on the day. That's going to give a little bit of push higher in the VIX as people are buying puts to protect some of their portfolio values as they start to see some weakness here in the equities. NASDAQ is down, let's call it 3 points on the day. But that being said, that is pretty close to being unchanged. We were positive earlier this morning. There's a lot of news coming out, or a lot of speculation, I should say, with regards to China and the tariffs. The big tariffs are coming into effect at the end of this week. That's when they're scheduled to go. And it does not look like Trump is going to back down. A lot of people are actually starting to get behind Trump on this because they're seeing a lot of jobs come back here to the United States and not a whole lot of incentive to go to China. That being said, China is not wanting to play ball here. They still want to steal the intellectual property. And that's really what all of this tariff stuff is about, is that we are trying to get China to stop stealing intellectual property from U.S. companies, and they refuse to do that. They want to, rip off some products that they can then sell cheaper and take all those profits away from us. So that is a big rub, and I agree with that. I don't necessarily agree with tariffs, but I wasn't expecting the tariffs to go over so easily in this U.S. economy. And it seems that I was in the wrong camp thinking that the tariffs were going to really hurt us. There's a lot of economists out there that are starting to kind of feel the same way, it looks like. So that, I think, is going to give strength to the overall equities, as well as, those talking heads start to admit to being wrong, like myself. All right, now here's the E-mini S&Ps. This is what I was talking about. I believe that the market is going to continue. We got a bit of a correction here, but I do believe that the market is going to start trending higher again and start moving towards the 3286, 3287 area. I think that is going to be the next target. We do have some overhead resistance right here at 3166 that we're going to have to get through. But I do believe that the market is going to trend in that direction. It is a 61 Fibonacci, so a little bit of a tough haul to get through, but I think that we will get through that this week, and then the next target is that 3286. Doesn't mean that we aren't going to see some corrections here and there, because as we start making those all-time highs, remember, there is going to be the overarching theme of people wanting to hedge positions and get out of some of those long positions heading into the end of the year. Okay, so we see a lot of weakness heading into the end of December as a lot of these big hedge funds and things of that nature, big money managers want to cover some of their stocks heading into the end of the year, because you can't book a profit just based on a paper trade. You know, if you are still long that trade, it looks good on paper, but it's not realized gains. So they want to mark the books showing that they've had these nice gains for the year, so that next year they can go out and sell to you and I and say, hey, we did this great last year. We expect to do this year. You need to move your money over to us. So that being said, we will see a little bit of choppiness heading into the end of the year, but I do expect us to target that 32.86 relatively soon. Maybe it won't happen by the end of this year, but into January, the January effect is after all those guys sold all that stuff, right, in December, they come back into January and start buying because they've got to add portfolio or put some money to work is what I should say, building out that portfolio, which drives the markets higher. So that is what we could see as well. But I do expect the market to want to trend towards that 32.86 as a target now that it seems like that unemployment number was very strong. It looks as though the U.S. economy is doing well. Will the U.S. economy be able to pull up the broader global economies? I don't think that that's necessarily true, but we are starting to see some silver linings across the pond as well. Let's take a look at the daily chart, or the breakdown of the daily chart, I should say. These are 30-minute candles. This is what I was talking about. Inside day from Friday, despite the fact that yesterday really was over and above the top there, but we are inside day right now. Overnight inventory relatively flat, maybe a little bit short, but coming into the day session, we got a rally to the highs, and it's just kind of a back and forth, bit of a choppy market there. All right, McDonald's, I did cover those 185 puts that I had sold on Friday. I covered those for 15 cents. So I had sold the D's, sold the 185 puts in there for $1.01. I bought them back for 16 cents on the day. So I'm out of that hedge. If we get any correction in McDonald's, I'm going to look to add those 185 puts again, because I've got a collection of well over $1, which, just on those puts. I sold some calls as well, but I'm lowering my cost basis on this, because if you remember back here on the earnings, I got nailed on it, right? We got a big drop on it. I was short the 200 puts in there for that earnings trade. So now I'm long McDonald's at 200, but I've collected over $1.50 in credit. So now I'm synthetically long at about 198.50 ish. If I say I got $1.50 credit there, continuing to lower that basis lowers my break even, and makes it a little bit easier to achieve a break even as you're lowering basis overall. So, like I said, if I get much more of a correction, maybe any volatility spikes, then I'll be able to go in there and sell some more puts. I think that McDonald's isn't going anywhere. It's kind of stuck there right at the point of control, which makes it the perfect candidate for selling options against my position, because I can lower that basis very easily without a whole lot of fear of getting stuck with it. All right, so that's what I'm doing. I'm not adding anything today so far. We are going to be doing a webinar on synthetic short stock. And this is a very important webinar, especially for a portfolio hedge or a pairs trade. We don't want to go in there and borrow stock. There's so many things. There's fees and all kinds of negative repercussions for shorting stock. But when we do it by building it with options, we can get out of those financing fees and maintenance fees and things of that nature that come along with shorting stock that not a lot of people will talk about. So I'll talk about that in Thursday's webinar, what the benefits are of using options in your portfolio for that reason. And please check that out. Go to protraderstrategies.com. Also follow us on Facebook. Give us a thumbs up there so you can get quick access to these videos. If you can't take that, take it easy.